Welcome to News Beacon, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. Ford stunned the auto world by slashing its electric vehicle budget, pulling back billions once promised for an all-electric future. This wasn't a minor tweak. It was a public admission that going all in on EVs was proving far tougher and costlier than expected. Wall Street's reaction was swift. Ford's market value plunged by $12 billion almost overnight. Investors saw the move not as caution, but as a sign Ford was struggling to compete and deliver on its promises. Years of effort to rebrand as an EV leader were suddenly in doubt. The company's flagship models, like the Mustang Mach-E and F-150 Lightning, now symbolized a strategy in crisis. The core issue ambition collided with reality. Ford, like other legacy automakers, had jumped into the EV race with bold goals. But making EVs at scale, and at a profit, proved daunting. The $12 billion loss was a harsh lesson. In today's market, promises aren't enough. Investors want results. When a company signals its grand plan isn't working, the financial consequences are immediate and severe. Ford's retreat sent shockwaves through the industry, raising tough questions about the future of legacy automakers in the electric age. Why did Ford pull back? In a word, profitability, or the lack of it. Ford's Model E division was losing tens of thousands of dollars on every EV sold, with costs rising and demand cooling. High battery material prices and expensive factory retooling made things worse. The early wave of EV buyers had passed, and mainstream customers balked at high prices and limited charging options. Sales projections fell short, forcing Ford to discount vehicles and erode margins further. Meanwhile, Ford's gasoline and commercial divisions were still the company's financial backbone. Executives realized they couldn't keep pouring billions into a money-losing venture at the expense of their profitable core. Fierce competition from Tesla, Chinese brands, and other global automakers only intensified the pressure. Ford's leadership chose to slow down, cut spending, and focus on a more measured, sustainable path to electrification. Wall Street's optimism about Ford's EV future vanished overnight. The $12 billion market cap loss was a dramatic signal. Investors no longer believed in Ford's electric ambitions. Analysts had to rewrite their forecasts, slashing expectations for Ford's EV growth. The fallout went beyond stock price. Credit ratings and future borrowing costs were now at risk. Ford's leadership tried to spin the move as strategic discipline, but the market saw distress, not prudence. Investors sold first, asked questions later. The episode highlighted the brutal pressure on legacy automakers. They must fund profitable gasoline vehicles while investing billions in unproven EVs. Wall Street rewards bold EV bets until a company blinks. Ford's stumble was a warning to the entire industry. The path to electrification is financially perilous, and any misstep is punished. The message was clear: results matter more than promises. Ford's decision left EV enthusiasts disappointed and worried about the future of their vehicles. Many felt betrayed, fearing fewer updates and slower progress. But mainstream buyers saw Ford's move as practical, reflecting their own hesitations about price, range, and charging. Ford's pivot reassured them that hybrids and gasoline options would remain available. The brand's image took a hit, shifting from EV innovator to cautious follower. Competitors seized the moment, positioning themselves as more committed to electrification. Industry-wide, Ford's move sparked a sobering reassessment. If Ford struggled, the EV transition would be slower and more complex than many believed. Policymakers, suppliers, and other automakers took note. This was a reality check for everyone. The decision forced the entire ecosystem to reconsider the pace and practicality of going all electric. Ford's biggest EV challenge? The staggering cost of manufacturing. Unlike Tesla, Ford must retrofit old factories, a process that's slow and expensive. Battery supply is another headache. Ford relies on outside suppliers, making it vulnerable to price swings and shortages. Building its own battery plants would take years and billions more. Software is a third battleground. Tesla's seamless tech sets the standard, while Ford's systems lag behind. Attracting top software talent and shifting corporate culture is a steep climb for a century-old company. Pricing is the final dilemma. Ford's EVs are too expensive for its traditional customers, but selling them cheaper deepens losses. The company is caught between alienating its base and bleeding cash. Ford's ultimate challenge is build affordable, profitable EVs, something it hasn't yet achieved. Until then, the company's electric future remains uncertain. Comparing Ford's EV strategy to Tesla and GM reveals stark differences. Tesla, born electric, has no legacy business to protect. Its focus on EVs and software gives it a huge edge in cost and innovation. Tesla's factories and vehicles are designed together, making scaling up easier and cheaper. Ford, meanwhile, is stuck managing a painful transition, retrofitting plants and juggling old and new tech. GM took a big bet on its Ultium battery platform, aiming for flexibility across models, but has struggled with production delays. Ford's new approach is pragmatic, double down on hybrids and customer choice, rather than chasing Tesla's all-electric lead. Hybrid models like the Maverick and Explorer have been hits, appealing to buyers not ready for full EVs. Ford's strategy is more cautious, focusing on what sells now, not just the future. The big question: which approach wins? Tesla's tech lead, GM's scale, or Ford's hybrid pragmatism? Ford's budget cut is an admission. It can't out Tesla, so it's playing a different game. The company is betting on meeting customers where they are, even if it means ceding ground in the EV race. Only time will tell which strategy pays off. For now, Ford is prioritizing survival over speed. Ford's flagship EVs, the Mustang Mach-E and F-150 Lightning, showcase both its promise and its problems. The Mach-E wowed critics and buyers, proving Ford could build a desirable electric SUV. The F-150 Lightning electrified America's best-selling truck, drawing huge demand and critical praise. But both models were financial headaches. High battery and development costs meant Ford lost money on every sale. Price hikes and slowing demand led to unsold inventory and discounts, deepening losses. The budget cut casts doubt on the future of these models. Will Ford keep investing in them or scale back? Owners and dealers now face uncertainty about updates, innovation, and resale value. The Mach-E and Lightning are a microcosm of Ford's struggle: great products, but unsustainable economics. Ford's retreat puts the future of its pioneering EVs in question. Ford's EV pullback isn't just a corporate story. It has real human consequences. Downsized battery plants and delayed factory upgrades mean fewer jobs and dashed hopes for communities counting on new investment. Workers face uncertainty. EVs require fewer parts and less labor, raising fears of job losses and the need for retraining. Ford's slowdown may preserve some traditional jobs, but it also delays the shift to future-ready skills. For consumers, more hybrids and efficient gas cars offer practical, affordable choices. But a slower EV rollout could mean less competition, higher prices, and slower innovation industry-wide. On a national scale, Ford's retreat risks ceding ground to foreign automakers, especially as China and Europe push ahead with aggressive EV policies. America's leadership in the auto industry and its economic security could be at stake. Ford's decision is more than a business move. It's a turning point with national implications. The ripple effects will be felt far beyond Detroit. What's next for Ford? The company is betting on a balanced approach. Hybrids now, EVs later. Hybrids like the F-150 and Maverick are selling well, bridging the gap for mainstream buyers wary of full electrics. Ford's EV strategy is shifting from chasing volume to chasing profit, focusing on trucks and commercial vehicles where it's strongest. A next-generation lower-cost EV platform is in the works, but it will take time and discipline. The risk competitors like Tesla and BYD are moving fast, threatening to leave Ford behind. Ford must balance short-term survival with long-term innovation. The EV budget cut was a humbling reset, forcing Ford to confront its limits. The company's future depends on learning from its missteps and leveraging its strengths. The stakes are high. Ford's place in the 21st century auto industry is on the line. Only a disciplined, focused strategy will keep Ford in the race for the electric future.